Is the property market going to crash? And should you be buying properties now or should you be waiting until next year? And finally, will the anxious investor ever hit 10,000 subscribers? Now, all of these important questions will be answered today, my friends, along with some other important reports that have just dropped this week. So with that, let's get going. Welcome back, my friends. My name is Aaron, aka The Anxious Investor, and today's property update video will run through the most recent news articles that have just dropped and reports that could potentially shift the market in a direction that may affect many of you out there. So it's definitely going to be worth sticking around for. And if at any stage during this video you think, you know what, he's put a bit of work and effort into this video, or I enjoyed this, or I actually learned something, I'd be extremely grateful if you could just smash that like button. It certainly helps me out. And with that all out the way, let's get started. Now I want to begin with this very quick post I saw about the property crash not potentially happening. And I saw this on my Instagram during my researching of this video. Don't worry, that's not where I actually research my videos. I was just procrastinating halfway through. However, I thought this post was quite interesting, which actually looks at the US market, and it looked at some trends around previous housing crashes that have occurred. And it showed a quick graph looking at the average days to complete foreclosures. And the main point raised here was that previous crashes were down to massive overbuilding and poor lending, hence their reason for stating why they didn't feel it was happening anytime soon, and if it was going to happen, it'd take at least 941 plus days or thereabouts. And this isn't the stupidest post ever, actually. It's quite sensible because we know loads of people took advantage of buying houses last year due to the government schemes, low lending, and obviously having a lot more cash in their back pockets, probably thanks to furlough. But the likelihood is their rates are fixed, and by fixing rates, even if the rest of the economy goes nuts and interest rates then being increased, for example, it won't necessarily affect people in the short term. So we may not see the effects of potential negative equity or people maybe not being able to afford their mortgage payments for the next few years. But that's worrying, because one thing we also know, which is the next point I want to discuss, is the cost of living is massively increasing today. You see, we've seen the energy prices being hiked and user bills rising a further 50%. On top of this, we are seeing the prices for food rising at its quickest rate in almost 30 years, which is astonishing. And we are just getting started because people are now having to choose between going hungry or staying warm. You see, food and energy bills drove inflation to 5.4% in the past 12 months to December. And now we are hearing reports that fuel bills could increase by 50% in the next few months too. Just have a think about that. Think about your bills and think how that's going to affect you. Now, although you might not be linking this to property, it's linked to inflation, and it's more importantly linked to the household budget. If you have less disposable income, and let's say perhaps you've taken a maximum mortgage out in the last year or so, you'll be squeezed even more in the near future. And if the topic I'm about to speak on next happens, then we could see ourselves in some serious trouble in the near future. But just before we jump into that, I want to just show you the UK inflation as of December. It rose to 5.4%, as you can see from the image here. Now, this is a cause of concern and stress for people, and that's understandable. And my goal here, remember guys, on this channel isn't to try and scare you or and stop you from buying properties. That's actually my goal, but it's here to forewarn you of the potential negative effects that we may see in the economy. Times are changing and things move very quickly, and the last thing I'd hate to see any of you guys do after watching this video is ever struggle in the future. So let's jump on to the next point, which is potentially a bummer. Now, city experts say interest rates could be increased 5 times this year, as the Bank of England is now battling against inflation. Now, the actual prediction is that rates will jump from the current level of 0.25% to 1.5% by the end of the year. And you know what this is going to do, guys? It's going to affect 2 million mortgage borrowers on variable repayment rates. And it's worrying because there's borrowers out there who probably haven't seen the UK interest rates above 1%. And this article here that I'm just showing you now, guys, then goes on to further add worry to readers by reiterating that in the last 15 years, we've only seen raised interest rates 3 times. But now, all of a sudden, we are going to potentially see them being raised 5 times. And just to give you guys a perspective of what this actually means, if rates increase by, let's say, 0.5%, and let's say your loan is £150,000 for 25 years, you will instantly be paying an extra £21 a month. And if it gets to 1.5%, as some are predicting, then you'll be paying an extra £1,272 a year. So it's not going to be a pretty sight, my friends, if that happens. Now, this isn't the only article I found on this. I actually found loads. And a report by Chris Giles on the Financial Times stated that the economists are now convinced that the Bank of England will now need to do something, and they expect Bank of England to now potentially do the first back-to-back interest rate rises since 2004 when it meets this week. Now, the likelihood is that the rate will rise by 0.5% this week, and the probability of this happening, as per their predictions, is 90%. Now, if this happens and you're on a fixed rate, then, well, in the short term, you probably aren't going to be affected as much. But if they continue to hike these over the years and do it 5 times, when it does come to refinancing, guys, on your mortgages, it may be worrying times. Now, one economist, Ruth Gregory, who works for the Capital Economy, stated that inflation has risen far higher and faster than the Bank of England forecasted. It's crazy how they didn't predict this. I mean, normal people, even like myself, who's not an economist, we saw this coming a mile off. Now, with others predicting a slightly more modest rise, one thing we do know is that raising interest rates is not off the table. And if it happens, the housing market will be affected in some way, shape, or form. And finally, my friends, some concluding statistics that are not only shocking and some answers to the initial questions I posed at the start of this video. Firstly, we have seen house prices rise 69 times more in the past 40 years, which is absolutely bonkers. And on top of that, and probably more worrying, as I'm sure many of you will agree, is that house prices have risen 29 times more than wages over the past 50 years too. It's nuts. It's actually making the task of buying a property that much more difficult. Now, in regards to whether the market will crash or not, as some of you may want to know this, I did do some stats and reports in the last property update video a few weeks ago on the rate of sales now looking to potentially slow down, and experts now saying that renting is actually cheaper than buying a property. But in regards to whether we will actually see a market crash in 2023 or 2024 or even this year, the truth is nobody knows. I was wrong with my prediction in Q4 when I thought we were gonna start seeing a price correction. But then, let's be honest, we have had some major black swan events too, with different variants coming out from, you know what, into this space, giving a lot of FUD, fear, uncertainty and depression, being spread not only in the UK but across all of the world markets as well. And the facts are still the facts. The housing market supply is currently not meeting the demand. People are throwing more money at houses and competing with each other by often overpaying on assets. So people will continue to still buy, but if interest rates do increase and we don't get clarity on things like who's to say where the housing market's going to go? We know repossessions take time. We know people fix their mortgage terms for a short amount of time. So my only hope is now that in the future, in the next 2 to 3 or maybe 4 or 5 years, it looks a bit brighter than I'm actually anticipating. Now, as for the second most important question, whether you should buy or not, my answer is always the same. It depends. If you're an investor and you've done your contingencies and you are happy with your return on investment, then why not? Now is probably the best time. As I mentioned earlier, house prices in the long run will continue to go up. But if you're a home buyer, please stress test different mortgage rates. Look at your ins and outs when you're buying a property. Look at the bills, for example, and anticipate potential hikes in interest rates as well. And please don't over leverage yourself, because if all of this stuff does happen, then it could come back to haunt you in the future. And I don't want to see that. And with that, my friends, the moment you've all been waiting for. Or maybe it's just me. As of recording this video, I am 14 subscribers short of 10,000. So whether I hit 10,000 or not by the time I publish this, only you guys know. However, if I do, and you made it this far, my friends, I just want to take this moment to say thank you for all of your support. Without you guys, I wouldn't be making these videos. But when you guys couldn't be doing anything, and you try to spend a few moments with me, that, my friends, makes you pretty awesome. So until next time, guys, thanks for watching.